Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Friday, August 21st. So, end of day, end of week. Really nice way to end the week, I think, overall. Kind of from where we started the week, coming out of like a pretty choppy week last week. And some really nice outperformance in certain places. I'm going to talk a little bit about that. I'm going to talk about what I keep hearing on the tape. Whenever I see something or hear something that financial media keeps repeating over and over and over that is incorrect, I'd like to spend a little bit of time on it. So I'm going to do that. Right, when they talk about specifically, I keep hearing about, oh, it's only these four companies that are driving up the performance in the S&P. Well, so let me go into, I'll get into that in a second, but I do like to kind of disprove some of these things because it's kind of fun when I hear somebody who generalizes like this and is not really thinking about the whole situation. So we'll get into that. We'll get into this week's performance. First of all, two of the big names, I mean, huge. Speaking, well, today was definitely these, a couple names like this. Apple, I don't know if we're getting to the end of this move, but who knows, right? I think for, as long as I've been trading, that I really don't try to get in front of trends and momentum, right? There was a joke that we were saying this morning is, don't try to short these things that are like a freight train, right? Stay on the side of the trade, and if you're not familiar with this concept, try to learn a little bit about it. And you could read a couple books. I was explaining a couple books to someone after hours, but you could go to Mr. Covell's website and either trend following or the complete turtle traders. This kind of stuff will really open up your mind. I've had from time to time when I have newer traders in the room and they see a stock, they learn a little bit about like RSI and they learn a little bit about a name being overbought. What they do is they try to take the other side of the trade, thinking, oh, this thing can't go up any further. But if you get some experience under your belt, you realize that this is really where the money is made. And they kept on hammering calls today in Apple. Basically like the rapid fire type stuff. We were going over this in yesterday's member option webinar, but they just basically kept on going, over and over and over and over buying calls. So, one of the ways that you can really capitalize on a move like this, and again, we spent about a half an hour talking about this, but continuing to kind of roll your trades. So for example, if you hit like a nice, you feel like you got this trade in the beginning, you saw some calls in the beginning of the day, and you buy some, I don't know, short-term calls, right? You buy them for $1, you get out for $1.50. You're like, wow, I just made some money. Maybe even you get out of the last piece at $2 or above. The next thing that you should think about doing sometimes, and again, this video is for information purposes only, I'm not giving any advice or recommendations, but one strategy that you can deploy is you take that $2 that you made and you roll it out and up, right? You keep some money in the game and you go out to the next higher strike or a couple strikes out further and you keep messing with the profits, right? And you keep the trade on for as long as this does this, for as long as it wants to act crazy. That's how you make the money. You make the money by sticking with these crazy moves for as long as they're going to last, and you keep rolling your money over and over and over. That's how you compound your money in a very quick amount of time. It's the same thing with Tesla. Now, I kind of screw up with Tesla a little bit because I had this mentality on and I did it a couple times and I just didn't stick with it. But you can learn from, I always give you my perspective, and I'm as transparent as I can be with this stuff. But really, like, that's how you make the money, is sticking with these crazy moves like this and staying in the trade. And one of the ways that I've learned to stay in the trade is you keep rolling the trade, right? So taking profits, especially with short-term calls, again, if you have something that goes from $1 to $2, you take it off at $2 and you put another trade on for like $1.50 or $1. And then again, and you're constantly taking that money out and just messing with the profits and just letting it go over and over and over. Now, again, these situations are kind of rare, right? They don't come about every day. But it does repeat that these situations do happen from time to time when stocks just go parabolic, north. And the whole thing is to realize that that you may lose money on the very last piece of it. But if you could do this 4, 5, 6 times, right, and realize that you're going to lose the money on the very last part of the trade, then it's worth it if you get these things. It's the same thing. Like one of the analogies that I could try to use is if you play craps at a casino, and there's someone who is very hot on the table. Now again, if you've played craps a bit, you know that sometimes the table gets cold and nothing happens for a while, and then someone will go off on a streak where they'll just keep rolling and rolling and rolling. Those times are when somebody puts together a roll like that. That's when you make money at craps. Now you have to have the money on the table, and you have to be able to not lose too much money when the table is cold, right? It's a little bit like trading. I don't like to associate the casino to trading, because it is different, and don't let anybody try to tell you that it's just like a casino. There's strategies that will sometimes work and pay off big, but that's how, when someone is rolling like that on a table, right? I'm sure, like, if you have some experience with this, you've seen it. Somebody could go and they could roll 20 times. Now you have to keep your money on the table. Now, again, taking the money off, like, is one strategy. Like when I'm in Las Vegas, and hopefully everybody can go back to Las Vegas soon, but it's one strategy to deploy, where when someone keeps winning or keeps hitting their number, you take some money off the table, but you leave what you had on the table on, and you just keep letting it roll and roll and roll. Again, that's how you do it. The guys who are not good at it will basically say, "Oh, they shouldn't be rolling. This shouldn't go on anymore. Let me take the other side of it," right? And that's the same thing with with what happens like this in Apple. And I think more inexperienced traders will look at a name and they'll say, "Oh, it shouldn't be up here. I'm going to take the other side of it." And if you're not familiar with this concept, read one of these books, right? And you'll learn. They'll give you some really good examples. This is a really fun read. Over the weekend, summer reading. This one is also very good, but if you're looking for like an entertaining type light read, The Complete Turtle Traders is a great story and good book. So the reason why I bring these books up a lot in these videos is because it's helped me a lot to kind of stay with the trend and to not fight things. I had somebody ask me, and I hope they don't mind me sharing this, but I had somebody ask me about buying puts today. There will be a time to buy puts, but right now, unless you really can time a top, it's really difficult to know when puts are going to work. Right now, I don't see much of a sell signal. We'll talk about market breadth in a second. But there's no major price signal. There's no moving average crossover. There's no price falling below this moving average. We just don't really have any strong sell signals yet. So let me move on from that conversation. But that's basically how this market is working right now. I'll talk a little bit about some of the trades too that I think are kind of interesting. Home Depot had great earnings, just like just like what we saw a couple weeks ago with a lot of these growth names that ran really hard into the number. Home Depot did the same thing, and they're coming in a little bit. But look, they found support and seems to be bouncing a little bit. I'm really trying to get where I would like to put on a bigger position in Home Depot is if it gets down to the 20-day moving average, but we don't know if it's going to get down there, right? So what did I do today? Again, I'll give you the trades that I do, but I started to leg into some Home Depot calls. Now these things are already marking, I think, at $9 because it did bounce, right? And that's why you kind of think about a little bit of strategy when something is dipping. We had another down day yesterday, and this morning Home Depot was down. So I figured, what, I think eventually this thing bounces. I don't know when, but I managed to time this pretty well. And again, if it happens to come a little bit in, down further, because I was thinking that maybe it would come down to here, then I will, it's why you kind of scale in a little bit and with a name in an uptrend. BABA, first of all, JD, I don't know if I talked about, I think I forgot to talk about JD in yesterday's video, but look at this breakout that's happening in JD.com. Now, it kind of looks like a little bit of a similar situation that's going on in BABA, which I think I talked about in yesterday's video, but I did put on a position in this, and this will be really exciting if this thing gets going. Right? You have to remember too that BABA has been kind of, it was in a pretty much decent sideways position, kind of a funky looking inverse head and shoulders type position. So it broke out. It's been doing like also a funky consolidation, but they had strong earnings. So it's kind of a gift, I think, that they didn't just do what JD started to do right after earnings. Like, unless I'm missing something, I don't think there was that much of a difference between the earnings results that these two companies had. I think both were pretty darn strong. So we'll see if the buyers start to come into BABA, and there definitely was some call positioning, as we saw some call positioning yesterday. So I'm in it. I did take some targets because, again, I'm really in the mode of right now, trying to be as smart as possible with taking some chips off the table. So if I get something like this that I put a trade on for 13 bucks and it moves up a couple bucks, take some profits, and if we happen to get some volatility in the beginning of next week, then I'll add back that position, maybe around the $13 again, and we'll kind of go from there, and we'll reset. Again, just a few other names that I'm looking at as well. Costco, I did not keep this trade on because right now I'm just being very cognizant about how I'm positioned. But I said earlier, if you're following some of my posts, I said, if you kind of add some of these things up that we're seeing on the tape, like, there's Walmart calls today, which I don't like. It's tough for me to play Walmart because I think they're constantly lagging. Like back in the day of Sam Walton, they were a leader. Right now, they're a catch up. Right, they're constantly trying to catch up to Amazon and some of what some of the other retailers are doing. So could they actually, break out and so forth? Yeah, they could, but I would rather look for names that are like, Costco is the leader of what they do. So I would rather stick with the leader. Same thing with Amazon too, right? I also constructed a trade for Amazon too for next week, just so I've got a little bit of skin in the game if Amazon wants to continue to move higher. Now, also, I have no knowledge of if another one of these companies is going to split their stock, but it seems like Amazon could be a logical play for that, and I would never put on a trade just for that particular reason. But I love Amazon; they're a leader, so I'd like to have 3 or 4 reasons for me to put on a trade. But I think some speculation into whether or not these guys are going to split their stock, it kind of makes sense. And maybe some other people have the same thought as I do and are playing that and are going to bid up the shares, right? So it's always a little bit of buy the rumor, sell the news. So I continue to like, especially move as Amazon has had a couple inside days after this move out of value. I think it's smart to kind of position a little bit in that. And I did that versus a call spread. Again, I'm always happy to show you the trades. Here's what I'm doing. Just a $10 wide call spread for next week. And, that's a trade that is leveraged to the upside. So if it does make a nice move, that's basically how I play Amazon a lot, is these type of call spreads. Yeti, I did decide to take another target in this one. Again, I don't want to be rigid with taking targets. I think that this can get up to, the next place for Yeti, I think is 52.25. So I'll take another target and so forth. I put on a decent sized position in Yeti the other day, so it's slowly working in the right direction, and that's fine. What else? The semi ETF, right? So first of all, Nvidia did not wait for like the usual 3 days after like an earnings report for this to get going. Right back after 52-week highs. So that is why that I covered that iron condor yesterday, because this thing almost went to the strike that I had. So it's a smart management with the iron condor that I had. But yeah, I mean, very strong. We also saw some calls go up today in AMD. I tried to trade earlier. But again, I'm really on the side of right now kind of, not trying to build new positions. So I think this looks pretty good for next week, actually, right? It's putting in a nice bull flag. So that name will be on our watch list. By the way, how did our watch list do for the week? So again, this is something that we started a new program with, where I put together a watch list every weekend for members, and they've been out. These watch lists have been outperforming the market for like, basically I think about 5 weeks in a row. So take a look. We outperformed again. And what I did with this basket is I bought it on Monday's open, and then I sold it at the end of the day today, substituted a little bit of SPY, and then as I create my watch list for next week, I'll buy that on the open as well for a 1 week trade. And again, look at the performance. Right, so we'll talk about this week's performance. Right, SPY was up 0.8% for the week. So again, I think again I may be off 1 week or so because I haven't really been counting that closely, but I think it's 5 weeks in a row that this watch list that I put together on the weekend has outperformed SPY, and again up 2.5% versus 5.8%. So even though there's a couple names in here that I thought like Ulta had a chance, Zebra I thought had a chance, UNH, which I'm surprised as well. But look at the performance. Fastly, which we traded in the room, SE, which I had an earnings trade on for. Square, I believe I traded this week. Did I trade Square this week or was that last week? Zillow was up 8.5%. Wing was another one up 6.6%. So again, the methodology that I'm going through using the market webs indicator is coming up with some nice outperformance. So I will do that trade again, and I will spend a portion of my weekend doing the research, which I love to do, and I love to beat the market. Right, that's what I'm love to do, right? And for members, right? Some of these guys, it's funny. I like to make fun of this stuff, but some of these guys on Twitter, right, and who are running subscription services, right? They have a winning trade, and it's like unbelievable. Oh my God, I did it. That's not us. That's our job every week, right? That's not an outlier. That's something that it's my job to do that week after week after week. If I don't do it, then I feel like I'm not doing my job. But this is the normal. That's why I'm not these guys with the exclamation points and the little rockets on their tweets. Right, congratulations, you did it. You got you had a winning trade. So give yourself a pat on the back because maybe it's not usual for you. So I don't know. It's kind of funny. So going through the rest of this week's performance, small caps, you're killing me, smalls, is my saying whenever I see the small caps go down like this. Pretty interesting. It continues. I hate to use this phrase over and over, but it is what it is. It is the haves and the have-nots. This is a phrase that I started using about 3 or 4 months ago. And for now, that continues to be the situation that we're in. Banks, oil and gas companies, right? We did see some XLE calls. Somebody asked me about XLE calls, hit the tape today. But I'll tell you, if I'm a trend trader, I'm going to stick with the trend, right? I'm not going to go after these names that are continuously getting pummeled every week, or they rally for 2 days and then they go back to their downtrend. Not rally, but they bounce, right? That's something that you've heard me talk about now for weeks, is that these names will bounce, but they'll go back to their downtrend. So it's really tricky, right? If you think that these names are going to get out of their downtrend, it's really difficult. What do you notice with this chart, right? Here's a high, right? Lower high, right? And a small bounce, like a weak and feeble bounce, and basically back to the downtrend, right? Here's the 200-day moving average. The 200-day moving average is on my charts because it tells you whether or not a name is in an uptrend or a downtrend. And this thing can't get above the 200-day moving average. So why spend time here, other than for like a quick trying to, time a quick bounce? It's tough. Now, that said, if we look at value versus growth, is it due, for a bounce, right? We heard about that last week about the value rotation. That was it, 2 days, right? I even talked a little bit about that too. I was on Bloomberg TV and I said, hey, maybe it lasts a little bit longer this time. Nope. You had 2 or 3 days, and that was it for the value rotation. So again, it could happen for a couple days, but keep in mind the trend right now is not favoring value. I don't know when it changes, but we'll monitor it for more than a 2 or 3 day bounce. All right, so that's the main story in terms of performance, right? And so ITB was actually the best performing, right? We keep hearing the same nonsense. Oh, it's only the 3 or 4 names. The guys who keep saying that it's only the 3 or 4 names, uh, shame on them. They're not doing their homework. Now, let's talk about that for a minute. So, by the way, the Chinese internet. So, tech with Apple having this huge week still was not one of the best. It's on the leaderboard, but it wasn't the best sector, right? And so here's the analysis behind this, right? And I put this. Oh, I don't have this up anymore. I have it on. So I put this out earlier on Twitter, and I can explain this a little bit. Right? So I don't have the one stat. Everybody keeps talking about uh, basically the FANG stocks. Oh, well, they're responsible for 80% or whatever percent of the performance in the S&P 500. That you have a valid point with that. The S&P 500 is a market cap weighted index. The largest companies are the biggest weights. So yes, they are going to dictate a lot of the performance. That's how they designed it, right? That doesn't necessarily mean that the rest of the index is not doing well. It just means that the largest companies, the way that the index was constructed, are controlling the biggest portion of the performance. That's just how the index is weighted. If you want to do a little bit more than paper thin analysis, then look at what the S&P 500 equally weighted has done and look at the top performers in there. Now notice there's an Amazon in here, there's an Apple in here, but they're not the only ones that are performing well, right? They're being now some of the other names like a CARR or a Tractor Supply, or believe it or not, L Brands. Somehow L Brands is up here, right? This is performance. I did do this right. Yes, year to date. ServiceNow, Cadence, Norton, Newmont, right? These names are up 50%. So the reason why you don't hear more about them is because they're not the biggest names in the S&P 500. So because of the weighting scheme, they can't control the performance of the S&P 500 because they're not the biggest names, right? So, and if you get past that paper thin analysis, what you will find is there's actually, so right now the S&P is up 6% year to date, but there are 84 names in the S&P that are up over 20%. There's 31 names, right, that are up over 40%, right? So right here, so you can't tell me that it's 4 names that are the only ones that are performing well. Now, again, there could be 4 names that are responsible for a good portion of the returns because, again, that is how the index is weighted. But that doesn't mean that other things are not performing. That's the difference, right? So you have 31 names that are up over 40%, not just 2 or 3 names. So stop it with that argument. The other thing is, right? So, what do we have to watch? So let's move past this one. The other thing that we do have to watch in the future is whether or not breadth is breaking down. Now, it is a bit, right? We know that we are in this have versus have not market, and there's a lot of companies that are suffering, right? The travel companies are not in a very good situation, right? The oil and gas names are not in a very good situation. The banks who have a lot of loans on their books are not in a very good situation. This is kind of common sense, isn't it? So as a trader, as an investor, the beauty is you don't have to buy any of those companies that are in bad situations. You could pick the ones that are capitalizing from this situation. So again, this is nothing new. This has been going on for months. And we'll see how much it continues. Does it worry me that we are seeing a divergence here? Yes, it is worrying me. So what do you do when you have something that is giving you a little bit of a warning signal? Well, you take a little bit more off the table and you kind of see how this plays out a little bit, right? So I'll kind of leave it there for this weekend's video. Don't feel like you have to kind of, have the accelerator down at all times. If you're seeing something that doesn't look right, right? I used this analogy earlier too, right? It's like on the New York subway. If you see something that doesn't look right, you say something, or in your portfolio, you do something. You lighten up a little bit, right? And if we do get a correction a little bit, which I'm fully kind of anticipating a little bit that at some point, August, September, they're weak months, we get a little bit of a pullback in something. That's where I want to kind of look for, you know, um, strong names that may pull back a little bit, just like Home Depot did after earnings a little bit because it ran up a little bit too much. So, I think that there's going to be plenty of opportunities. You just don't want to get caught, right? And just like the analogy that I was talking about at the craps table, which again I hate at gambling casino analogies, but if we start to falter at some point, make sure that you're not giving back the gains that you've made over the last couple months. All right, so that's the name of the game. Really great week. I could talk about a lot of the trades that we did this week. I'm just very satisfied. I'm not going to rehash. I did that in yesterday's video too. So I'm not a big, huge, victory lap person because again, this week's over. We're on to the next week, and my job is to find next week's setups. So I look forward to that, and look forward to next week's challenge. Have a great weekend, everybody, and see you on Monday.